What up, YouTube family? This is my turtle, that's my cat, but that's not why I'm making this video. I'm making this because I want to introduce you to a student in our course by the name of Deepak. He is super busy. He's got a really demanding job. He wanted to invest in rental properties, but he wanted to be what he refers to as a lazy investor, meaning he's got other stuff to do. He can't be like spending a lot of time on this. So he enrolled in our course, Your First Rental Property, and really honed his goals, his objectives. Through all of that, he was able to hone his search criteria and figure out how to invest in properties that are within a 10-mile radius of where he lives in a way that is suitable for lazy investing. So I will let him tell his story, but cut to the chase. Spoiler alert, spoiler alert. He now owns 3 rental properties. He came into our course owning 0, and within 2 years, he was able to buy 3 rental properties thanks to his ability to like really hone what he was looking for and do it the lazy way. All right, so with that said, here is Deepak. Deepak, hi.
Hi, Paula. How are you?
I'm great. How are you?
I'm awesome.
Excellent. Excellent. Well, thank you for taking this time. Tell me about yourself. Tell me about your journey with real estate.
Yeah, I'll try to keep it short. I took the YFRP course in spring 2019, and I've since bought 3 rental properties, and I'm on my lookout for the 4th one.
Wow, that's amazing. Congratulations.
Oh, yeah, absolutely. And but my journey is a little bit before that. Actually, I mean, I'm originally from India, and I came to the US 15 years back, and I've been working here in corporate America, me and my wife. Always had a philosophy about, personal finance and money as, make money, I got to spend it, right? So there was never a thinking about, I got to really save money or financial independence or any of that kind of stuff. My wife is more frugal, and so we did actually buy a rental property back home in India, but I never viewed it as an investment, so to speak. And now when I look at it, those cap rates are terrible.
Tell me about your journey from 0 to 3 properties, at least 0 to 3 in the US, not counting the rental in India.
Yeah. So when I first started, right, actually I had started looking for that first property for like 4 to 6 months. And I was having a really hard time because even before I started taking the course, I knew some of the analyzed pieces of the module, right? Because I'd listened to your podcast about how you run the numbers and all of that. It was just not working out. And I was going into, and I live in Minneapolis, St. Paul, by the way, Twin Cities. So, and I was going into a lot of these Class C neighborhoods and starting to see that it was really tough for me. From a lot of dimensions, I just couldn't look at those houses and see the people and interact with them. And I was just like, I don't know how I can ever invest in these kind of areas. It's just, I'm having a hard time with this. So I was doing this for 4 or 5 months, and I started taking the course, and my wife, she said, I don't know anything about this stuff, but here's what I will tell you. This is your first one. I don't know why you're trying to hit a home run on your very first one, right?
Right.
And we live in a suburb, which is, a very affluent Class A neighborhood. But we also have a lot of condos and townhomes here. So essentially, I decided, okay, maybe this is the first one, doesn't have to be a home run. So I found a condo, which is 2003 built, very new, very good. It wasn't like hitting the big, I was like, Paula said 6 to 7% cap rate. I'm not hitting that. I was obsessing over it. It was only going to generate about 4.5 to 5%. And I sent you a message. You probably don't remember. You sent me a note back saying, it's okay on your first one. And I was like, okay, I got the validation. I'm going to do it, right? Now, I lucked out on this one. This is like so good that I've had 1 unplanned maintenance in the last 2 years. Really, it came with a tenant who is super. She's been there for years, and she will continue to be there. So I had to do really nothing on that one. And I self-manage it. So because of that, the cap rate's probably been more in the 5.5%, 6% range. But since then, I bought two other properties. I bought both in the same within 10-mile radius of my house. Those are more townhomes, 2-bed, 1-bath with HOA. All of these have HOA because in Minneapolis, if you want to buy anything below 200,000, 99.99% they're all going to have HOAs. So I got them. They are more what I would call Class B type properties in Class A neighborhoods,
Perfect.
which are the second one actually needed a whole bathroom remodel, but I ended up getting a lot of equity in the process because I got it cheap. Yeah, so I mean, I essentially, I bought the second property 6 months later, and then I bought the third property in the middle of the pandemic last year in August. So yeah, I have an agent who I work with. She's also a friend. She helped us buy our personal residence. She's herself a real estate investor. But I also have a system set up here. So I'm part of the strategic mastermind groups as well. So one of the things I talk about, I'm a very lazy investor, which means that I have rinse and repeat. I just do exactly what I've done. And so here's the system, right?
Yeah.
So, and this is probably a bit of an aha of self-realization as I went through this process, which is I've realized my niche, which I'm sticking to it at this point, which is I invest in Class A neighborhoods within a 10-mile radius of my house, within 4 or 5 zip codes, because I know this area like the back of my hand. I know exactly what the rent will be when I look at this. They are low maintenance. So I deal with a certain class of tenants that I don't have to worry about. And the reason all this is important is because I have a full-time job and I really don't have a lot of time to invest in doing a lot of maintenance kind of work. So I'm able to do that. Now, I'm sure you're going to tell me, well, you can have a property manager, right? And I can, and I will. My goal was to kind of manage them myself so that I can learn about it. So when I do hand it over to a property manager, I can actually know what to look for. But outside of the upfront work, I've had really very, very low work. So I have this handyman who basically my tenants will text when they have a maintenance issue. He'll deal with it, and then he'll tell me, Deepak, this is what it's got to happen, and this is how much it costs, and I'll say, yep, do it. So I don't actually deal with maintenance issues either, and I manage all of my rental payments through Cozy. So I've a bit of a system, so I've become a bit lazy, if you want to think of it that way. So
That's great. How did the course help prepare you for lucrative lazy investing?
So it's not, I don't know if you would define it as lucrative, right? These are all like, it's very like in the 5.5%, 6% cap rate, but I'm happy with that. I'm not looking for that 10, 20, 15% cap rate. So I'm okay with that. It's hard for me to like say it was this particular thing, right? It was everything for me because everybody told me, Deepak, are you sure you're going to do this? Do you even know what it means to be a landlord? And all I said was, I've taken Paula's course. I know everything I need to know, or everything I think I need to know. And that was it. So it is a bit of a Bible. So every time I go under contract, I go back into the modules to kind of refresh. Like when I had to screen tenants, like, okay, let me go back and look at the piece about screening tenants. What did they do? What about, okay, when we first moved in, stuff that when I did the course, I may have kind of, not thought too much about. Then I go back and look at it and say, simple things like, an idea that Paula said was take a video of the whole property on the first day. I build my checklist with the tools that you've given. So that's how I've kind of used it, right? So for me, I would say the elements that I probably leaned in very heavily are the analyze, the manage piece, I guess, if you want to call it that, are the two pieces. I haven't done any fancy financing. They've all been conventional 30-year mortgages with 25% down. The team, I think, is the other one, which again, I have had my agent. Now, I have not done any of the stuff that you've talked about, driving for dollars, nothing. I buy all of them on the MLS. That's my only thing. Like I said, I've been lazy, but it's worked for me.
Nice. So the analyzing module
Yes.
helped you analyze properties. The module on building your teams helped you learn how to screen for people, and how to get the right people on board.
Right.
And then the tenant management module, particularly because you're self-managing.
Yes. I would say those are the three big ones that I continue to go back and look at every time. I still, for every property, I have the analyze spreadsheet, the YFRP spreadsheet. In fact, in our strategic mastermind group, I shared it with the rest, right, to show, okay, this is what I had said in the beginning, and this is where I am now a year later, 2 years later. I'm a bit of a numbers geek, so I like looking at that kind of stuff.
Oh, that's great. That's great. And now, since you bring up the mastermind groups, tell me about the support that you've received.
It has been less of a hold me accountable kind of group and more of a network, learn what other people are doing, which by itself has been fascinating for me. So I viewed it less as a support and more of an opportunity to network, maybe like a RIA type environment. We exchanged a lot of ideas. We had a wide variety of people who are very experienced to people who just have one property, right? So I think that itself was great. I learned more about, how one of the individuals did a lot of bird type investing, and another individual did more of turkey investing. So just kind of interesting to learn about that. I guess to answer your question directly, I haven't viewed it as much as a support network as much as just networking and learning more about things.
Nice. Tell me about, I think you mentioned the spreadsheet, which you frequently go back to. What other tools have you used? Like worksheets?
So the spreadsheets, the analyze spreadsheets were probably the ones that I used extensively. Then I used checklist when somebody moves in. I forget what it's called. So
the move-in check. It's called the move-in checklist.
Checklist. Yeah. So I used that. I think there was a script or something that I remember using when we were screening tenants. That is the one module I've gone back many times in terms of how we talk to them, how we deal with them. But those would be the things I would say that I have directly used, as in like lifted it off the course.
Nice. What would you say to somebody who was thinking about enrolling?
I would say it's a no-brainer. So I have a lot of friends here who say they want to do real estate investing, but the thing that stops them from doing it is the fact that, I don't know about this, right? So I talk about, I say, you can acquire knowledge by taking a course. Now, not that that's going to be the only thing. You pick your mentors.
Right.
I've picked mine. I said, this is a course that I have taken and I would strongly encourage you to do it. But I think in an area like this, right, even though it's not rocket science, people still have a lot of fear. And in my opinion, this is a great way to start by saying, okay, let me formally learn what it is. Let me kind of figure out all the different pieces here. And then you got to personalize it to yourself, right? Because I can't do every single thing that Paula is asking me to do.
Right.
And I also, one of the things that I learned through the process is I can personalize it to what I want. And I said, I've kind of made my own niche or strategy, so to speak, which works for me. And I'm going to do it as long as it continues to work, right? And my goal is not to acquire 50 properties. I want to acquire 6 properties and then pay them all off and I'm done.
Nice. So you're halfway there.
I am halfway there. I have a number in mind in terms of what I want to do. And I jumped into real estate really because I wanted to kind of have a diverse portfolio. And I wanted to, through somewhere down the line, I said, okay, I discovered financial independence late, but that's okay. I'm going to still work towards that. A chunk of that early retirement will happen through real estate. It's not the only way, but I want to have that cushion.
Is there anything that I haven't asked about that you think is important to know?
For me, just maybe because I'm so obsessed with the numbers, right? I think one of the important pieces is you don't have to make all your money in year one, right?
Right.
Real estate is a long game. And I realize it fully now, right? I mean, my intent is to buy and hold for the next 20 years. So you may not hit a home run right at the get-go, but that cap rate is going to get better and better as you go and move. And I can already see that even in a short span of 2 years. And that makes this even more attractive. And the other piece, I look at real estate, as you've said, as part of my bond portfolio. Because it's really, everyone talks about, opportunity cost, right? I have X amount of money, I can put it in the stocks, I can put it in Bitcoin, whatever, right? You can make all this kind of returns. Well, I want to put a bunch of it in real estate, which is a diversified asset. But oh, by the way, it has bond-like characteristics to it. If you do it right, if you do your due diligence right, obviously. In my mind, it's going to give me more or less a fixed 5% return year over year, for most parts. I mean, I know there'll be some variability to it, which is way better than a bond, right? It may not be as good as stocks, but that's going to actually help, and that's just a different perspective of looking at it from an asset allocation, if you want to think of it that way, which I thought was, again, a bit of an aha as I reflected on, zoomed out, so to speak.
Yeah. That was an aha for me as well when I realized it, that viewing real estate as the fixed income portion of my overall portfolio is what gives me the courage to go all equities in my investable portion.
Absolutely.
And I have a little bit of cryptocurrency exposure also, which I probably wouldn't have if I didn't have real estate.
Yeah. The last piece that, I'm still kind of, hanging in there. I'm not done it. In 2021, as I look for properties, I can see that the market is so different. It's hot like crazy. Supply is low. Property, even in the last 2 years, my agent was telling me, oh my God, these are so priced high. I'm looking at it now and I'm like, compared to even the last 2 years, it's ridiculous now.
Right.
I'm having a hard time finding properties that would, meet my criterion. And when I do go and see them over the last couple of weekends, I've been going and seeing them. The very same day, there's like 5 different offers on it and all above list price. And I'm saying, I'll pay about 20, 30 grand below list price. My agent's like, yeah, I don't think that's going to work. So at some point I can see that I'm just going to have to say, this is not going to work. I might have to go invest out of state and I have to get out of my comfort zone and do it. And because I've gotten so comfortable with the localness of what I know here, the unknown of out of state certainly scares me.
Yeah. We have a new video that's going into the course from Rich Carey, where he talks about the hierarchy of boots on the ground when it comes to choosing your out of state location. Okay. And so in terms of ease of location, like the hierarchy basically goes, the easiest place to invest is if you yourself have previously lived there. The second easiest place to invest is if somebody who you absolutely trust lives there. And they don't necessarily have to be investing with you. In fact, arguably it's better if they are not.
Yeah.
But someone that you trust who can just once every 5 years, in case of emergency, that's that once every 5 year person, that by itself makes it a lot easier.
That makes sense. That's a good framework to think about, I guess, if I want to think of it that way. Yeah, I have some friends in some locations that would be worth looking at. We'll see. Like I said, I'm going to still try to find properties here to stay in my comfort zone, if you will, but we'll see.
Thank you for spending this time. Have a great night.
Yeah, you too.